In your experience, what's the most common mistake you've seen first-time founders make?
That's a good question.
Mhm. They're killing it.
The
They're
the
putting up
most the
bunches of
most
it.
common, yeah, I could at least there's one that immediately comes to mind. Whether that's the most common or not, tough to say. I think, and we made this mistake ourselves when I was at the startup plan T guy I referenced, is hiring a salesperson too early, or and this kind of goes hand in hand, like the founding team trying to offload sales, in particular before they've
Mm.
found product market fit.
Hey, everybody. What is happening? My name is Martin Martinez. If you've been to one of these events before, you've seen my face. It's good to see all of you here in FI land. Welcome to Air Meet. And I'm just going to kind of wait a little bit while we get a lot of y'all filtering in. We already have a ton of folks. I can't see the full number, but our backstage manager will update me here in a few minutes as to how many folks. I'm coming to you live from Austin, Texas. We just hosted Founder X here in the Lone Star State, Austin being the host city, heading into South by Southwest, which was just a couple weeks ago. So we had a chance to really bring together the global community. Many folks, like yourself from all over the world. And I'm already starting to see some really awesome countries. So do me a favor. It's going to be a very interactive event. Let's light up that chat for me. Tell me where you're coming from. Tell me where you all are coming from. I already see you, JD. Tell me where you at. We got people out of Florida, Wisconsin. All right, we got some US based people, but I definitely saw some people. Oh, Ania right there out of Texas, right on. What part? LA, Taiwan, Australia. Good morning, I guess. I don't even know what time it is over there. You let me know. Colorado, Sacramento, New Zealand. All right. We got people from all around the world. Keep that coming too. I love seeing that. We pretty much get representation at every one of these online events from every continent minus Antarctica. But I know there's folks in Antarctica, so y'all need to get on it. Uh, anyway, I've been with Founder Institute 8 years now. I was privileged to help bring the organization to Texas. Back in 2017, nobody had heard about Founder Institute. To date, now we've been around 16 years now. We're in 200 cities, 100 countries around the world. It's been a joy to watch this organization grow, and feel like we've been able to contribute a little bit here in the Lone Star State. So, this event, on Air Meet, if you've done this before, what's going on, our friends in Egypt, Pakistan, Nigeria, Chicago. Air Meet is one of the last really effective online networking tools that I've seen since the pandemic. We had a ton of those that showed up. Not a lot survived. Air Meet has certainly done a good job to maintain a strong product. So we've been using it pretty well over the years. It's got a lot of different functions. Obviously, you see this chat. We're going to be using the QA tool. Again, I don't know how many people we got in the room right now, but if you give me three, right now we had about over 300 people RSVP. We normally get, well over 100 for this one. I think it's going to be no different. But yeah, so as you can imagine, this many folks, the chat tends to get a little busy, right? So use the QA tool. This is an AMA format. So when we bring our guest, CJ up, him and I are gonna chat for a little bit, but then I was going to kick it to you all. So please come with questions. Use that QA function. Should be that third, where is it? That third little icon, little two bubbles, little conversation bubbles. Use that. That's what I'm gonna be looking at. Okay, with all the activity we get in the chat, your question, if you ask it there, might get lost, and I don't want to miss it. Okay, so do me that favor, and it's gonna make our lives and yours a lot easier in terms of getting those questions answered. We're gonna have the full hour. I'm bringing CJ up here in a second. We're gonna get to know him, and then right after that, we're gonna dive in and listen to all the questions you have, and hopefully we can answer them for you. So thank you all again. Keep using that chat. Connect with each other. Drop those LinkedIns. Tell us how the weather's like. I want to know. You're up, Mohammed. You're up at 2 a.m. in Cairo. I like the dedication. Okay, I like the dedication, man. Give us some questions. Make that time up overnight worth it. So let's bring up CJ with our friends 43 North. Let's bring him up. How you doing, man?
I'm good, Martine. How about yourself?
I'm living,
Happy
dude.
to be here.
Yeah, and I got a lot of sleep last week. South by Southwest kind of beats you up, but we had Founder X the week before. That just floored me. So I'm upright. Gained some weight back. No, the founding
Glad to
founding
hear it.
journey, man. Putting on a conference very much is like that. But yeah, definitely for our audience, I know this is your first time using AirMeet, our first time really getting to chat. So I'm looking forward to this. I'm glad you're with us. Tell the audience, tell us a little bit about yourself right now.
Yeah, sounds good. So I'm CJ Carr. I currently lead the selection process for a pre-seed and seed stage accelerator called 43 North. We are based in Buffalo, New York. We were founded in partnership with New York State with the mission of economic development for Buffalo, and we execute on that mission by investing in early stage, primarily tech companies, and then running a year-long in-person program out of our offices in Buffalo. And we found that if we do a good job recruiting and supporting through the year, then the economic development takes care of itself organically. And we've been lucky enough at this point to have 60% of our active investments maintain a presence in Western New York post program. And I grew up in this area. I grew up in Buffalo, so it was a mission close to my heart. Just prior to this, I spent about 5 years as an operator for a pre-seed and seed stage wearable tech company called Plantiga, which makes sensor insoles that measure gait and biomechanics from the shoe. And that was its own unique experience. So happy to chat about that. We almost died several times when I was there, made it through the pandemic,
Mm,
got to work with a bunch of professional teams and amazing athletes. And I should say I'm non-technical, but that experience allowed me to see almost anything you could imagine on the business side of
mm.
a startup, from sales, customer support, strategy, finance, and accounting, which is a little bit more of my background. But yeah, like having that experience and now being on the other side of the table, so to speak, has been fun. And looking forward to the questions and hopefully sharing a few valuable nuggets here.
Right on. Again, thanks, CJ. Thank you. And now looks like we're already starting to get some in, but people have a tendency to kind of pop on a little late, so I want to make sure that everybody is aware. Again, use that QA function, y'all. Again, but that chat's already very wild, and I want to make sure that again we're getting your questions seen and answered up here. So use that QA tool. There's also some upvoting. Upvoting, so we'll surface some of the most popular. Many of you probably have the same question. So avoid, if you take a look at that QA tool, you might see somebody already asking a question similar to what you have. Upvote it up. And then everybody gets that benefit of the answer. Now, so it helps avoid being skipped over for redundancy. So we want to avoid all that, y'all. But I don't think y'all are some good educated folks from all around the world. So I think y'all are gonna be fine. But before I do that, I think you might be able to answer some questions based on what you just told me.
Sure.
Tell us about that journey, man. Said you made it through the pandemic, made some, so there's a lot of learnings on a first time found, or really when you think about it from a first time fundraising, that already I'm seeing from the questions. So let's dive in there because personal experience can go a long way.
Yeah. So I guess where to start. So I joined the company in January of 2018, right after they had raised about a $2 million pre-seed round. And I guess one thing that I was able to learn for folks who are in the audience and maybe considering the operator route or just being an early stage employee, I was able to leverage a bit of my background in finance accounting to get my foot in the door.
Mm,
So I, offered to build the financial model for investors, clean up our board deck. I ended up doing our books and our monthly and annual accounting, and from there was able to build trusts with the founder and was able to be given more responsibility and to explore a little bit. But I guess in terms of the pandemic, so we maybe a week before everything really shut down, a round that we had fell apart. So a handful of the investors that were considering coming in, were pulled back, rightfully so, because nobody knew how the world was going to look, the next week, let alone the next several months or a year. And so what we ended up having to do is the entire team took a meaningful pay cut. So I think one lesson there is, while it was painful, we all did it together.
yeah.
So we all were kind of in the same boat there, all 10 or so employees that were at the company at that time. And we did it quickly. This was right after we knew that some of these investors were pulling out, we had a very frank discussion with the team, and we all agreed that we wanted to keep this moving forward, and we all agreed to a substantial cut so that we could keep pushing towards the mission. And then we were able to move quickly to get some government support. So this company was based in Canada,
Mm,
and there were a handful of loans and other programs that the government quickly spooled up that were not typically offered to startups, but they granted some flexibility to companies like ours to help us survive. So I think it was just making that deep cut first, and not doing a bunch of subsequent little cuts to salary and expenses was one thing that I think we did right. And then just moving quickly. Like it was a crazy time, but we took advantage of every single program we possibly could, and
mm,
that was kind of my role as as VP of finance at the time, to just make sure I was making sure that the company was funded. But we did survive, and I think maybe 7 or 8 months later, we were all back to full salary, and we were lucky enough to have a meaningful defense contract through the Canadian DND that kept us
mhm.
afloat until we were able to raise that round about a year and a half later.
Nice. Well, right on, man. Again, I'm glad to see that y'all persevered. Not a lot of folks did. Right? It was a wild
It's
time.
true.
It was already half a decade ago. Try not to think about it. Most don't.
Yeah, and
Um,
for us, I mean, we thought we were, typically, when you're selling to sport, or we were doing a little bit of medical and physical therapy. Those are a little bit more recession proof than other industries, but
yeah.
with no fans in the seats, and no clinics, physical therapy clinics or other open for business during the pandemic, or at least the first several months, we
Mhm.
we had to switch things up pretty quickly.
Nice. Awesome. Well, let's dive into these questions then, because I think that's a good segue into our audience. And now, good job, ladies and gentlemen in the audience, because y'all just filled up a ton of questions for me. So let's try and knock these out as best as we can. 45 minutes in, or 45 minutes to go. So I promise we'll get as many as we can. Y'all try not to double up on questions, and make sure you're using the QA function and upvoting, because I won't be able to see them in the chat. I'm already seeing a few of y'all break that rule. Let's start with right at the top, Carly Wainwright. Carly, where you coming from? You're out of Wisconsin. Yeah, for pre-seed and seed levels, is an accelerator the easiest way to get traction, or is there other ways with angels and other pre-seed investors? In your experience, what have you seen?
It's a tough question to answer broadly. I think it really depends on the individual founding team and the company. So if you're if you're second or third time founders, and you have a network, and you have a track record, and maybe you even have some of your own capital to invest from a previous exit or a previous career, then you may not need an accelerator to get traction. You very likely wouldn't. And it'll be easier, or in theory, it'll be easier for you to raise proper venture, or from friends and family.
Mm,
But if this is your first time, and you don't have capital to bootstrap, or maybe you just have a little bit of capital to kind of get things off the ground, you don't have an investor network, or a founder network to lean on
mm,
to raise from institutional investors, then I think accelerators are really, really good options to explore. Accelerators, I would say, like, you can get creative, like pitch competitions. Like, we are also a pitch competition at the very end of our process. We still have maintained that from our earliest days. And more, I see more and more like high quality pitch competitions popping up. They're often very targeted on sector or vertical, and so those are great
mm.
opportunities to get 25, 10, 15, 50K to maybe hit that next milestone, or get your first handful of customers.
Yeah, yeah, and I'll add one more thing, Carl. It's a good question, good way to kick things off. Seems like it's a popular one too, Carl. But yeah, for when I get that question as well, it's really you got to ask yourself, where are you coming from as you're starting a company? If you already have a track record and you've been in there and you already have a network and a community of folks, then you may not need an accelerator. And I'll say that too, somebody who runs one like yourself. But if you are looking for community, you're trying to figure it out and you don't know where to begin, accelerators, especially at this level, at the start of that journey, can be one of the best ways to do it because it's going to give
Yep.
you grounding, assurance, confidence, but mostly people that have been there too that aren't going to call you crazy. Not that's why you're giggling, man. Everyone that
Yeah,
loves to
for
call you
sure.
crazy, and that's just not the encouragement you need or deserve as a founder. Go embarking on the journey at the very beginning. So again, we're very bullish and proponents of accelerators here for the obvious reasons. But good way to start things off, Carly. Thank you. Let's go down to the next one. Arnaldo, I think he's out of Chicago. Yeah. What are the biggest mistakes you see founders make when they pitch investors? Good one. This is a good one.
Yeah, I guess. Well, I mean, maybe I'll sort of narrow it to like an intro meeting, or say a live pitch, and not a cold email or something like that. But maybe I'll highlight two, and that sort of immediately come to mind. I think one is not not trying to build some rapport early in the conversation. So, and hopefully the investor is doing this a little bit as well, and reciprocating. But I think not just jumping right into the pitch or the deck, asking a personal question, or like hopefully you've done a little bit of research about the person you're talking to, and just kind of like you know making sure that you're getting to know each other a little bit, as well as learning about the business, and that it doesn't seem so transactional. And then number two is, you know, um, I don't know how to say this better, but like, I think it's always a red flag, or it can be like concerning if the investor feels like you're putting on like a hard sell,
Mm,
or the pitch seems like very salesy. I think the best pitches are often very matter of fact, and it's there is narrative and story, but oftentimes it's just a clear communication of what you've done and where you're going. So you don't need to oversell your traction. Just say you've grown 2x, over the past 2 years, or stuff like that. So just being very clear and straightforward with what you've done, as opposed to trying to make it
mm,
too much of a proper sales pitch, or like what people I think view as like what a sales pitch
mm.
is.
Yeah, good point. Good point, CJ. Because yeah, there's two different pitches, y'all. There's two different. There's a sales pitch that's going to be for the customer, right? Those are the people that's who you're solving the problem for, whatever it is you're building. But that's not an investor pitch. It's not. They're not necessarily going to buy it. They want to invest in the future of the problem they're trying to solve, but totally different pitch. Another thing I would add too is, to your point, going right into the deck. You're just going to try to take up as much time as possible. In many cases, you're networking. You're at events. You might be here in this room, doing the networking after the fact. Might be an investor in here that you're going to pay. The last thing you want to do is immediately start pulling out the deck. Again, there's a hint of desperation that comes out. You touched on it. It's overly pushy. It's salesy. You want to build rapport. These are still, at the end of the day, people. And a lot of first time entrepreneurs, founders make that mistake and just think they're an ATM, just here to dispense money. And that's their job, sure. But at the end of the day, they're still people and you need to respect that. You have to understand that. So there's one thing you have to just kind of get your mindset in. Take your head out of it for a second and really think about it from the lens of them. Right. So
Yeah, for sure.
good,
Yeah,
good
and the founder, I mean, they have to, or the investor, like they have to like you as a founder to
question.
invest. Like it's pretty rare for, I think, an investor to write it, like maybe in exceptional circumstances, but I think it's rare for an investor, regardless of the business opportunity, to write a check to a founder that they don't like or they don't trust.
Yep. Yep. Exactly. And that actually goes into a couple of these other questions. I'm going to combine them a little bit. And then we'll just kind of, not necessarily we'll bring them up, but people are looking like, oh, if you're running into, there's Jaden, you have a question about what are important subjects that investors look for. I'm thinking interpreting that as industries across the board. You have to really go and ask, investors what is their thesis, right? What are they actually writing checks for? A health tech investor isn't going to invest in your crypto thing, right? Crypto investor ain't going to do your hardware startup, right? So you have to ask these questions to make sure that you're not wasting too much time of your own talking to folks that just aren't going to work with you and invest in you. Certainly, you don't want to waste their time either, right? So, that's it's going to be across the board. I wish there was a most, superlative to do this, but there's an investor for every kind of thing, right? Which also goes into the next question that Brian has. You're hearing a pitch outside of your specialty, and is it going to hook their interest, right? The answer is probably going to be no there, man. They might do a side deal if they really like it, but if they're an investor at a traditional fund, they're going to only invest in what that thesis is describing. So again, don't waste your time on it. You have any thoughts to that?
Yeah, I would say maybe this is a variation of that question, but like for us, we're generalists, and
Right.
so we can't be experts in every area, sector or vertical. And so when it's something I in a space that I know a little bit less about, that's where I think communicating with plain, straightforward language is super, super important. And there are you cannot completely avoid jargon, especially if it's a
Mhm.
technical business. But as much as you can, try to avoid jargon and try to just explain what you do. Like you don't really have to do more than that. You don't have to be make it like some tagline or anything. Just tell investors what you do. And then the other thing I'm going to be keying in on is traction. And so
Mm, yeah.
even if I don't, I maybe can't ask like the smartest question about some of like the challenges of a particular industry. I can at least understand if this company has good traction or not, and that's a signal that you're at least onto something, and a
Mm.
signal that I'll want to study up and learn more about the space you're in.
Absolutely. Let's actually get into that. You said traction. That's one of the magic words. And I know there's somebody down there that asked the question. Traction varies.
Yep.
How would you define traction? How should a founder, especially when that's still a very hard, nebulous term to wrap their heads around, how would you describe it?
I mean, I think it's like it could be any. It's really like in the broadest definition, it's any indication that the problem that you're solving is real, and that it's truly painful for the audience that you're going after. And so that could be usage. It doesn't have to be revenue. That could be, you have 3 or 4 amazing design partners who are like top 5 firms in the industry.
Mm,
And then of course that could be revenue.
yeah.
I think any of those can be compelling, but it sort of depends on the space you're in and what you're trying to do.
Yeah. And again, yeah, revenue, obviously, money in the bank. That's the fastest way. It shows that people want this. I think I froze maybe. That's weird. You can hear me. All right, I'm
I
back.
can't hear you. Yeah,
You can
you're
hear
good
me.
on
Okay. I
that
was
front.
like,
Yep.
eh. But revenue obviously is going to be the leader. You have money in the bank, people are giving you money, you're doing something right. But that's not going to be for everybody. Right. So to your point. You said you were doing, I guess, was it not dual use? You had government contracts, but like, how do you get those? Like LOIs. You have to start somewhere.
Yep.
They're not necessarily going to give you money, but they're giving you letters of intent. That can be traction, right?
Yep.
It's going
Totally.
to depend. Depends on your industry, who exactly your customer is, how long those sales cycles are from first engagement to close. So again, for many of you, you're looking for a magic bullet. There isn't. It's going to be really focused on who you are as a founder, what you're building for who exactly, and how you're actually going to transact for that revenue that's in the bank.
For
But
sure. Yeah,
yeah,
and maybe one other way to think about it, especially if you're really early, or maybe you have a hardware component to your solution, is just sort of like speed of development. If there are clear ways you can demonstrate that and communicate that. Like for example, we 2 years ago we invested in a pre-revenue hardware, or like software enabled hardware company that was in the clean tech space, and that was a little bit unusual for us to go that early, but the team was exceptional and they had built the first version with very little capital in a very short amount of time for
Mhm.
what they were trying to do, and so that was a great signal for us, and we were able to ultimately say yes because of that.
No, that's awesome. That's awesome. And again, it's a big assurance, right? At the end of the day, especially at the stage that y'all are at, they're looking at the trust that you have in you as a founder and your founding team to actually get the job done. Putting a lot more faith because you're not going to have a lot of these numbers yet. You're still proving that this is something worth pursuing and worth building something big, right? So some of y'all have to really understand and kind of ask more introspectively as to what that means and what that means for the company. So let's see. Again, we got some great questions. Now, remember, use that QA tool. Use that QA tool, and upvote what you see, what's good. Let's actually get into more of the relationship. We talked about investors or people. Um, so let's see, James out of uh, from the West, James. He's like, I'm told we should start warming relationships with investors before funding, but also investors are flooded with pitches and have prioritized traction, so we're on track. Is there anything in terms of like monthly recurring revenue that you should be looking at? Again, you know numbers, you've seen it. Are there some standard metrics? And this is a good question. In terms of that, some investors are looking for certain kind of stable, scalable growth.
Yeah, for sure. So I guess it depends on how much you're looking to raise, and kind of what everyone has, like, different definitions of pre-seed and seed and series A, but sort
Mhm.
of where you might fall within those buckets. So if you're pre-seed, and you're targeting pre-seed investors, and fortunately there are many proper, like, institutional investors that focus on pre-seed now. I don't think revenue or like MRR is gonna be. They're not gonna, like. I don't think many of them are gonna tell you that, like, we have this specific target, because often they'll invest pre-revenue. And so they're going to be looking at other stuff like the team and the market opportunity, and like your any sort of technical differentiation, and things like that. If you start to get to seed, and, like, you mentioned MRR, so I'm assuming what you're building is SaaS, or a SaaS business model is something you're contemplating.
Mm.
Then it's gonna be a little bit more metric driven. I think you're, like, a good seed round today, I think, is probably in the range of like 800K to maybe a million ARR. So, wherever that comes out to in MRR,
Mm.
maybe, 20, 30, 40K per month. But I think, like, most sophisticated investors will be flexible on that if there's something else the company spikes on, if there's something else that's exceptional about the company, or if your growth rate is incredible. Because I think
Mm.
that's probably the most important thing, is not the absolute recurring revenue, but how quickly it's compounding.
Yeah.
So yeah, I don't know. I wouldn't get too caught up in metrics. Like, I will say, if you're pre-revenue and you're a software company and you're trying to raise like a $5 million seed, that's probably going to be challenging for you. But if you're a few hundred K in ARR, and you're like 10 plus K in MRR, and you're growing quickly, I think you can get an audience there.
Love it. Yeah, again, good points on it. Yeah, let's keep going. We're halfway through. We've been knocking out some questions as I was hoping. So yeah, let's get to this next one right at the top. Todd, oh, you're out of San Diego. I'm actually going to be there on Wednesday, heading out to work on a music festival. I'm an event producer by
Nice.
trade, so I love events. Yeah, I'm just doing
Good
box
deal.
office, so super easy. But either way, Todd, yeah, I'm gonna answer. I'm gonna say this question out loud. CJ, I want you to take it first, but I'm feeling we might beat you up a little bit on it. Respectfully, we're here to help. But
Sure, sure.
so Todd out of San Diego is asking, as a pre-MVP startup, we're looking for pre-seed investment to build our MVP and go to market. Given that we're pre-product, what are some effective ways to show traction to build confidence enough to attract the level of money that they need? So I'm gonna let you take that first, CJ.
Yeah, that's a
That
that's a great question.
yeah.
I think you might have to be a little bit creative, but there are ways to do that. I think the two possibilities that immediately come to mind are, or one is like you can build a website and you can kind of show people what the product might be, and you can start to build a wait list before you have a product. And if you get enough interest, then that's a good signal that you should actually build the product. So, like, I can't think of a specific example, but I know there are multiple companies that have probably built 1,000, 10,000 person wait lists before they even had, a Figma
Mhm.
design. And then the other way to do it is to have your customers pay you for it. And so if it's a real problem that you're solving, there's a decent chance that you can go to a customer and pitch them essentially what you will build and have them fund it for you with with an initial contract and having some piece of that be an upfront payment. So I've seen both work. There's
Yeah.
probably other things that you can do, but those are the two that immediately come to mind.
Yeah, I actually give a talk on this, our very first session for our Texas founders across state. We're in 4 cities now, but I always like to try to do the first one across the state. And there's a variety of ways you can actually build an MVP and not need any technical skills. Like for face value, when I see that, like, oh, give me money and then I'll build it, it'll turn an investor off because it's like, oh, I'm not going to do any work until you pay me. But a founding team does the work knowing it matters first. So that's a signal for me. Is this something you actually care about? You just want to get paid to go do something that's fun. That's great, don't we all? But you got to show some effort. You got to show some effort in that this is something that you're willing to learn about building versus, oh, if we get money, then I'll hire a dev team, then I'll hire a CMO. I hear that a lot. Every time I've heard that, that person fails, they quit the program or I kick them out because that's just not how you need to approach it. And to CJ's point, there's plenty of things right now. We use a couple tools right now, like Riplet, Lovable. These are no code tools, and you can build an app easy. You don't have to do any kind of design work. You just start typing it in. Boom, you're starting to get something magical to play with. So that shouldn't stop you right now. You can so that's a really fun no code solution. That's a really hot way to build your MVPs now. Traditional ways are the concierge MVP. This is the traditional one, as I would call yours, the hamster wheel. Again, you do that. You're building your email list, you're putting it in a spreadsheet, you're making phone calls, hand delivering it or whatever. A lot of great founders started that way, very successful ones. Piecemeal MVP is another one. I think you alluded to again. So you're just taking things off the shelf. Like I've seen folks you leverage meetup groups and Facebook groups when those were working and like taking them to like Eventbrite pages, selling tickets, again, just showing that there's revenue coming in, proving the concept, but not using anything that they've had to build themselves. And then they go raise money because they're to TJ's point, they're proving that there's demand here, there's a market here, and people are willing to pay money for it. Those all count as MVPs, man. So don't let that discourage you. Like, oh, I got to get the money first, then I'll hire the dev team. That's usually a terrible way to set fire to tens of thousands of dollars.
Yeah, yeah. And to your point, there are very few excuses now to not not build a software MVP, given the tools that are out there. I haven't used Lovable, but I was playing around with Bolt.new over the weekend. It's a comparable sort of
Yeah.
prompt based coding platform, and
Uh,
I was blown away by what I could build in a weekend. And
it's fascinating.
I was able to like build 80% of our application just through that. And we're using a different provider, a different web form, but I'm not
Yeah,
even sure we'll be continuing with them
yeah,
after that
yeah.
experience.
Yeah, and I hear you, man. I hear you. And then now there's just like this overload of tools and like just like what we're using right now, AirMeet. There was a proliferation of event networking tools because we couldn't do events like we could, the first couple of years of the pandemic. We all try to forget. But then there'll be a contraction. A lot of them just went the wayside. They raised a ton of money, crazy valuations, and just kind of set that money on fire. Focus is important. Platform like this is focus. A lot of these tools will probably do the same, go the same way, but it's important that you try them all out and see what's working. So don't let that
Yeah,
discourage y'all, right? Again, just because you don't have technical skills does not mean you can't build a product right now. It's easier than ever. Entrepreneurship, I've been in it for a decade, just supporting others, but been an entrepreneur my whole dang life. This is not one of the best times to do it. So again,
yeah,
good question, Todd. Good question.
yeah. And if I could just touch on that
Yeah,
quickly,
go for it.
another thought that comes to mind, related to the sort of like the democratization or however you want to frame it of like software and app
Mm,
building is that's like software and like your technical abilities are probably less of a moat now than they once were, and so there are going to be other things that you're going to need to do to stand out, and like execution is going to be paramount, or we'll see. I mean, that's I
Mm.
think, like, logically where you would go, but yeah, I think just your software is not going to be the mode anymore in many cases.
Yep. No. Yeah. It's even I just saw a friend of mine. He's done a couple startups. He's well known in the entrepreneur. He just launched actually like an investment AI platform too. So he's like automating even the angel investment situation,
Hmm.
which is interesting. Like even what the guy at Anderson Horowitz retweeted it like, "Oh, I'm terrified." Like so, software AI is eating investment now too, and all that stuff. Like he said, software's eating the world. But yeah, I'm digressing. Yeah, again, y'all are giving some great questions, y'all. We got about 22 minutes left for the top of the hour, so we're making some good time. We're answering as many questions as possible. Just please, please, please use the QA tool. I'm seeing a lot of y'all not listen to me and break the rules, and I'm seeing people put questions in the chat, and I can't get to them. We can't surface them. We can't upvote them. So do me a favor, and there's a few of you. See a couple of you out of the US and a couple out of Colombia that are breaking this rule. Use the QA function. It's right beneath the chat that you're using. Use those little bubbles and upvote them. Okay. I want to make sure we can get to all your questions, but if they get buried in the chat, I can't help you. So definitely do me that solid, and I'll try to get your questions answered. So let's look at this. Ooh, good one, Luis. First one at the top right now, the new batch. In your experience, what's the most common mistake you've seen first-time founders make?
That's a good question.
Mhm. They're killing it.
The
They're
the
putting all
most the
bunches in
most
it.
common, yeah, I could at least, there's one that immediately comes to mind. Whether that's the most common or not, tough to say. I think, and we made this mistake ourselves when I was at the startup Plantiga I referenced, is hiring a salesperson too early, or and this kind of goes hand in hand, like the founding team trying to offload sales in particular before they've
Mhm.
found product market fit.
Mm,
And so that's a problem for two reasons. One, if you don't have product market fit, that salesperson's not going to know who to sell to, or what, how to even pitch what you're building, or they'll struggle with that.
mm,
Especially if their background is purely sales and not like, market development.
yeah.
So it's a very unique type of salesperson as well, who can thrive in a startup environment. But two, what that does is it separates the founding team from the feedback loop. And
Mm,
so you end up getting secondhand feedback instead of firsthand feedback from your customers, and that's dangerous. And things get lost in translation, or tend to, when that happens. So that's one I see all the time, and one we've made personally.
yeah, yeah, dude, I've been there. Mine has been, in my experience, I raised money for my first tech startup, and we might as well quarter mil, might as well set it on fire, and the big thing that we did was that we wasn't that we were validating, is that we maybe like over validated, which leads to what is a common term. It's called feature creep.
Mm.
So we weren't verifying and really taking into account, all the feedback we were getting. What we were doing is we're just taking it all for face value and then building exactly what the next person told us to build. So by
Yep.
the end of it, we had this big bloated product that didn't do anything well for anybody, but it did everything because we thought, oh, if we can
Yep.
build everything for everybody, everyone's going to be happy, but you can't. You can't. So we made that mistake, and we ended up having to rebuild the product multiple times. So we dumped all that money just into just technical debt and making and digging ourselves out of that technical debt hole until inevitably it turned into a product that weren't even intending to build. We ended up, selling the tech off, but a lot of lessons that this was before I discovered Founder Institute. It's a bunch of hindsight 2020. And a lot of the
Yep.
frameworks that that CJ instills, what we do at FI helps you avoid a lot of those things. So again, big mistake that I see again is that lack of focus. Being unfocused is even worse than being wrong in some cases,
Yeah,
right?
for sure. And it's understandable. I mean, I think it's scary to focus because you feel like you're you're sort of like putting all your eggs in one basket, or like it's not a big enough opportunity. But
Hmm.
it will kill your company if you don't. And we ran into the same issues. Part of the reason we almost died several times. We were selling to like physical therapy clinics, we were selling to pro teams, we were selling to individual trainers, we were selling to the government, and like when you asked what do you want to see on the platform, everyone had a different answer. So
Hmm.
exactly what you said, Martina. We
Yeah.
struggle with that ourselves.
Yeah, and it's there. It's there. It's something that again, it's an avoidable thing, but yeah, again, it's a discipline, right? And community in the beginning. That first question we had from, I believe her name's Carly, was just that. That's where these communities at the very beginning can help you, at least remind you of that focus that you need. Because when you're doing it by yourself or even just a core team, you have the blinders on, and it gets lonely and isolated, and then the echo chamber starts to come, and then you just don't know.
Yep.
Mentorship, advisor. That's all important. And that's why we do what we do, right?
Yep.
It's not
Yeah.
for the immediate money because I ain't coming for a long time. I ain't come for a long time, man. Just
Yeah.
to be honest on
Yeah.
it.
Yeah, and I think just one other thing to say on that is that sort of focus aside, I think um, there is sort of like a like a an intuition from founders that more features are better, and I feel like that's just rarely the case.
Mhm.
Even if you are only serving like a very specific customer base, doesn't mean that more features are going to make that a better product or a better experience. And so often it's like fixing the boring stuff, like the infrastructure, making sure things are working properly, that the app loads quickly, like that kind of stuff
Mhm.
that gets sort of set to the side in terms of trying to build some sexy new feature. And that you know I see why it happens, but I think that's something to keep an eye out for as a founder as well.
No, absolutely. Good stuff. Yeah, we are got about 15 minutes left for the top of the hour. We're making great time. How you feeling, CJ?
Great, ready to
Yeah.
rock and roll.
Yeah, we're jamming, man. I love it. All right, now again, I'm just going through our questions right now. Some of them are getting a little too specific, so I'm trying to just make sure that we're getting as much coverage on these questions as possible. And I appreciate y'all giving them, but want to make sure that the whole room is going to be able to benefit from these answers. Um, so let's talk about all right, we got somebody that's a little more technical. JD Bertrand coming out of Denver. So speaking with potential investors, we've had difficulty getting them understand our product or read the white paper. They hear things about the idea and immediately conclude we're just like other, his words, crap products in the space. How would you break through that? JD Bertrand out of Denver.
Yeah, good. That's a really interesting question. Without I guess without knowing more about what it is you do, there's two things that come to mind. One is it's possible you're just not talking to the right investors, and that it's just it like finding the right investors takes a lot of time, and it's a lot of outreach, and you could reach out to 200 investors and to get to the five that really get what you're doing. So I'd say don't be discouraged. Just make sure that the volume of folks that you're trying to connect with is meaningful enough to get a real signal. But the other thing is like if you're getting caught lump being lumped with competition, then and it sounds like it may be a crowded space that you're in. One way to cut through that a bit is to just address it very clearly and directly, and to do it sort of up front. So I read this great tweet thread from Elizabeth Ian at Hustle Fund. It was probably a year and a half ago that she sort of addressed this, and I think referenced founders like say they're building in like the mental health space or the climate space where there are these like massive problems that everyone just knows are big issues. And so if you come in talking to an investor, say like trying to like oh, climate's a $3 trillion problem, whatever, and people are gonna like okay, like they're gonna roll their eyes, like I can get it. So if you're kind of in that spot where there's a bunch of other people trying to do what you're doing, or have, but like you're different,
Mm,
address that and say like, here's what everyone else is doing, and like here's why they're wrong, or like,
right.
and here's how we're doing it differently. So just be like very upfront about that. I think that can be really effective. Like if you don't address it, I think you're just going to get lumped in, and you're going to struggle.
Yeah, and good way to approach that for sure. And it's, yeah, and so here's how I interpreted this question. For me, one thing I do a lot, JD, to answer the question is like, wait, I like to work. I do a lot of public speaking, as you can probably tell, on stage. Otherwise, we've had a lot of founders that I put on a stage at the end for our demo days. Y'all have those too, right? Pitch competition. So one of those values that I personally like to provide to my founders is I try to teach you how to be the best dang communicator you can be. And for a lot of folks, especially when they have highly technical kind of things, it's very difficult because, again, CJ mentioned it earlier, jargon can like really clutter your language, and that just goes right over to a lot of folks. To your point, JD, got all the acronyms here today. We got, he's having frustration getting people to just get it right. So some simple exercises. It can be challenging in the beginning, but the simpler you can get to how to explain both the problem, who deals with the problem, and how the solution solves the problem, makes your life a lot easier. And it's totally possible to do that in a sentence. So what I would, just without just knowing anything else about you, JD, is I would ask you, can you do that? Right? Do you not need the white paper? The white paper too, unless you have a highly technical person who's very academic focused, it's going to be hard to get them to read a white paper. I mean, right now, just when I hear white paper, I kind of just think crypto stuff. And it could be crypto, could not be. It could be something highly technical, academic, even that you're taking IP and trying to commercialize. Could be that too. I don't know. But irrespective of both of those angles that I'm just hearing this question from, I know that there's a struggle with you how to communicate it. So think about it like you're explaining it to maybe your 85-year-old grandma or your 5
Hmm.
year old niece, right? And if both of them can understand it, you can communicate it to anybody, right? So,
100%.
right?
100%. Yeah,
Yeah.
and I think there's like, I don't know how to describe this. I feel like there's a better way to sort of communicate this, but it's like if it's a super technical problem or like solution, like just try as best you can to just explain what it does and not how it does it. If that if that makes sense, like just kind of walk through like
Mhm.
how somebody interacts with it, as opposed to like what's actually happening. Maybe on the back end or underneath the hood, and I think that's a way to maybe cut through
Yeah.
any misunderstanding as well.
Yeah, and absolutely. And again, like what y'all are doing is hard. Whatever it is you're doing. I saw somebody that said they have like just like a cookie business. Have somebody else that's looking like trying to do something dual use from just the chat, just the cursory stuff. Everything y'all are doing is hard. Being an entrepreneur is one of the hardest things you can do. I said it earlier. Everyone that loves you is going to call you crazy, you know, but you do it because it matters and it gives you joy and it feels like it's going to give you purpose too. So I applaud all of you for taking the leap. And these are just the things that, you know, people like, CJ and myself see all the time, but y'all don't get to. So we're grateful that we have the time to be able to at least impart some of this. So you can avoid a ton of mistakes that both him and and myself have made many, many times in the
Yes.
past, right? We got about 10 minutes. Let's make it count. Let's make it count. We got a few still good ones here. I mean, everything's good, but I want to make sure we got something that's good for everybody. Um, Steven's got a more existential one here. Steven Daniel. It's he's out of Abuja. We had a bunch of folks from Abuja come in to Founder X just a couple weeks ago. So Steven's asking, how can startups find and win investors who align with their values? Values driven investors. I like that. Roadmap, it's one other thing, but really at the core of the question, Steven, is understanding, I guess, probably what kind of questions you should ask an investor to understand their values.
Yeah. That's an interesting one. I suppose. Well, I have a couple thoughts without, I guess, asking them directly. Although I think I mean, I think there. I don't think there's necessarily anything wrong
Yeah.
with sort of asking a version of that, especially if you're getting, you have a term sheet, or you're considering, going into deeper diligence, and things are fairly serious. But One thing you could do is just, go on their LinkedIn, and their Twitter and see what they post about. And, hopefully they're doing a little bit of their own writing. And I feel like
Mhm.
their values will come out of that. Same with like podcasts or, stuff like that, webinars. If, most investors these days, you can find them on something. So, in those sort of like more, conversational, lower stakes, like organic settings, I think some of those things will come out, especially as they, if they tell their story, like how they kind of got into the space and what they find compelling about being a venture capitalist. And I think the other thing you can do, especially again, like especially if things are getting fairly serious in terms of an investment process, is you make sure that you ask them for references to investments they've made, and you're talking to the founders that they've invested in, and you're getting their perspective on what it's been like working with them. And you can ask those folks, what what values do you see in this fund or this firm, and in particular, ask them, how did they act and operate when things weren't going well. I think that's the most interesting thing. It's when you come to them and you maybe only have a handful of months of runway and you're in trouble. How did they respond?
Yeah. No, again, good stuff. Again, that's kind of like an 80/20 rule right there too. Similar to what we do, we advise, founders go validate, just you want to listen as much as you can, right? Ask as many good questions as you can, learn from them as much as you can, versus you just wanting to talk, 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 because you want to. You want to, but that
Yep.
restraint, that focus allows you to make better decisions versus just waiting to take a breath for them to actually say something. So again, investors are people too, right? So again, good question, Steve. Good one. I think we probably can fit in like two more. So let's see if we can do that. Let's see. We got that one here. One more stuff. All right, here's one. Navy out of Renton and here in the US, B2B, right? How and B2B is harder, right? And these are businesses, buildings, like consumer can be easier because they're just anybody on the street sometimes, but B2B can be more difficult. Outside of cold calling and DMs, how have you had anything experience in, getting more validation from a B2B standpoint for your idea? Because we certainly get a lot of those, certainly a lot of B2B products.
Yeah. So, I mean, I think those are like I wouldn't discount those as channels. Certainly, if you can get like some sort of warm introduction, that's always helpful to a potential customer. But like just emailing someone is generally effective. It's like I think you'll find, especially if you know how your customer thinks and you know the language they use and you're onto a real problem, like they will respond to you, will respond to a thoughtful email. Like I feel pretty confident about that. So just to say, like, don't discount those, those avenues, but there are certainly other things you can do. One way of going about it is, to try to build like some content and like be a thought leader in your space. Lots of your potential customers will be on LinkedIn and potentially other social media platforms depending on the industry. And so that's a way for you to highlight the problem you're solving, and to highlight the way you're going about solving it. And I know while they're a consumer product, like Levels Health did an exceptional job of this. They built a whole. They really educated the kind of like the public on the importance of metabolic health, and they put out like some unbelievable, well
Oh,
researched content in the very earliest days, and that got them a lot of traction
hmm.
very early on without having to do a ton of outbound. And then there's also like I would also explore you know channel partnerships or sort of like indirect ways of getting to your clients. Those can be effective as well.
I love that. Good stuff there. Yeah, thought leadership. thought leadership. If you're already kind of an expert in the field and you start to put your name out there, you're building your own credibility that's going to beget people taking you more seriously when you reach out to them about what you're doing. And you want to be Googleable,
Yeah.
right?
Yep.
Start to
Yeah.
build that.
For,
Even if you feel like you don't have it, you start to build that, you know?
for sure. For sure. Yeah. And I'm curious to see how this unfolds, but like, there's probably an opportunity for folks to get in early on, sort of like the equivalent of SEO, but for like ChatGPT and some of the other, LLM search engines.
Mhm.
Because people will like, I think a lot of people, myself included, are moving to those to do, more traditional searches that used to happen on Google.
Yep.
And I already know there's a startup that's helping companies do this and like optimize it. So
Really? Yeah.
there's probably still a lot of time to sort of dial that in ahead of some of your competitors, and that may be another way to get ahead. And then, there was one other thought. Anyways, maybe it'll come. Oh, conferences. Yeah, like do the in person stuff. What I typically caution founders against is going to too many conferences that are just like generally tech or VC, but conferences where your customers are incredibly valuable, and
Yeah, like
those
trade
those are
shows,
worth
like
the investment.
specific
Yeah,
trade
trade show.
shows.
Yeah,
Yep,
yeah,
yep. Yeah, I've also seen that done the wrong way too, where it's like, oh, we're gonna raise a
sure.
bunch of money so I can attend every conference, and it's like, what? I'm just gonna give you
Yeah,
money so you can party in Vegas for 6 months? Like, no,
yeah,
no, 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 this ain't gonna happen. This ain't
yep.
happening. 'Cause most of those happen in Vegas. It's not the best time to be too productive there. Not the best place either. But yeah,
No,
so
no,
another
certainly
story for
not.
another day. But I'm gonna run over a little bit because there's two questions here. There's two women in this asked question. They've asked a few, but I want to make sure they're recognized because I think they're great ways to close. The
Sure.
first one, at least I believe so. I don't want to be assuming on this, but where are you at? I just saw you. Um, Mia, I saw you. Mia, you asked a couple questions. Really, the first one, and it's a follow up to what we were talking about earlier. It's like again, not immediately going in and pitching somebody.
Hmm.
Mia just asked just a couple minutes ago you're out of Detroit, right on. But so, what is an appropriate conversation? Maybe that first time you're talking to an investor. Again, you're at the networking event. You're at that happy hour. You bumped into them, after a session at that conference or trade show you're at, right? What are some interesting things that would lead to them saying, "All right, yeah, hit me with the pitch," or here's my card, let's do the pitch. Versus, again, I've had my phone's right here. I've literally had people come up and they just start doing the slide deck, and I'm like, ugh, I'm gonna get
Yeah.
another drink, right? That's what you want to
Yeah.
avoid, right? But like,
Yeah.
what are
Don't do
some
that.
natural
Definitely
things?
do not do that.
Yeah.
I think, well, so there's one I would say, and this actually is this sort of harkens back to something we touched on earlier, which is just having and the ability to clearly communicate what you do in just a sentence. That can be helpful because like ideally that's how you're introducing yourself. It's like, hey, my name, whatever your name is, and this is what we're like, this is what I'm building, or this is what I'm working on, and just being able to get that out in 15 seconds or less, and in one, ideally one sentence or less, and describing what you're doing in a way that an investor who has no idea, who may know nothing about the business or the sector can understand. Like that's one way I think to not only stand out because that's fair, still fairly rare, but to potentially pique their interest if it's a space that they're looking at. So I would nail that. Michael Seibel from YC has a great chat on this. I think there's like a 7-minute clip of a talk he gave at Stanford you can find on YouTube where he talks about this specifically, and he uses the example of Airbnb. And I think he was like,
Mm,
Airbnb could say we're a marketplace for space, but I have no idea what the hell that means. He's like, instead they should just say like we allow people to rent out the spare room in their house. It's
mm,
like something like that. Like that, the latter definition is what you're shooting for.
yeah.
um and then I think like if you're able to come with like a thoughtful question, or like something about this person, like that can be a way to kick off a conversation. You say you saw them on a podcast, maybe they just gave a talk and you have a follow-up question. Like those are good ways to introduce and like kind of open up the conversation without coming across as too pushy.
Good stuff right there. Again, yeah, again, just they're just people too, right? You know,
Yep.
if it's like, oh, can I follow up with you? Can we connect on LinkedIn? Would it be all right if we grab some time? I'd love to show you what we're working on, right?
Yeah.
And then
Yeah.
they
Exactly.
give you that, they give you that consent. They're like, yeah, absolutely, let's grab some time. You know, once we all get back to where we're at, where we're home is. And now you have a setup, you have their intentions, you have their presence, right? You can get that for 15, 20, 30 minutes an hour, who knows? But
Yep.
again, you just want to avoid the hard sell right off that first one. Again, it's like I've heard it a lot. We got. Looks like I'm getting told to wrap up here, but we're gonna close it on this. Uh, I've had some fun here. We just burned through this hour.
Yeah. It's been great.
Oh, that has been great. Thank you for being with us. Thank you all for attending as well. But I'll close it on this, and then I definitely want to kick it to you for the final words and how we can follow you. But you know, again, these are people too. Um, and at the end of the day, we're all just trying to solve problems that matter to us. And there are people, the investment community, that want to fund people that are doing that, right? So if you come at it again, very simply, genuinely, they're answering right now why you, why you're the person to solve this, why you're the person that's going to dedicate time in their life when they could be doing something else, probably giving them a lot more money, right? Why you, right? So when you answer and share that question a little more fundamentally, makes things a little bit easier. It's not going to be easy. It's just going to be easier relative to the journey that you're on right now. So approach it that way. And again, communities are helpful at this point too. You don't feel like you're alone on it. And then the last thing is, a lot of you are asking about pitching. So if you've already subscribed to this, you're getting updates for all our emails. We have specific events that are about getting your pitch feedback from mentors, from investors. We have a pitch boot camp event. So come out there and actually work this pitch in those networking tables moving forward. And we have more of those. So obviously, if you join this event, you're getting our updates, but definitely look at our calendar. I know we have some more coming up. But in that case, I know we ran over a little bit. Want to make sure we have time for all y'all to network with each other. DJ, it's been a pleasure, man. How can we keep following you, keep in touch? What do you like to post on? What do you like to share?
Yeah. So I'm not super active, I guess. I mean, I am on LinkedIn a lot. Respond. I do try to get to my DMs, so you can certainly reach out there. But email is typically best. So it's just dj@43north.org. If you want to say hello, would love to hear from anyone who was on the call, and happy to, of course, happy to share more about what we're doing. If it may be of interest, or if there are other ways I can be helpful, would love to connect. But you will see me post every now and then, a bit about us, like what we look for in companies, maybe certain sectors that we're paying a little bit closer attention to, things that are, maybe happening in this ecosystem, or I'll typically post when I'm on the road. So in Boston, New York, SF maybe once or twice a year. But I get on the road, once or twice a month to meet founders and investors. So keep an eye out for that. And yeah, of course, please feel free to shoot me an email, and we'll love to connect. And
You got
thank you for listening. I hope this was
Yeah.
helpful.
Oh, thank you. Yeah, I appreciate it, man. This was fun. I'll let you get back to it. And if you want to pop over to the networking tables, you have some time. Totally cool if not, but I'm sure they'd love to meet you more. We'll get you sunsetted out in the distance. I'm gonna wrap up here and send them off on their merry way. But again, I hope
Sounds good.
hope we connect soon, man. I'll follow up with you later. We can grab some time.
Yeah, sounds great. Well, Martina and Founder Institute team, thank you so much for having me and for organizing this. And hopefully this will be the first of many.
I'm looking forward to it, man. Hopefully I'll be on them with you. We got more fun to
Sounds
go.
good.
You take it easy, man. You have a
All
good week.
right. See everyone.
I know.
Have
Yeah.
a good evening.
So